Seth Freeman of EM Capital Management joins in now. Morning, Seth. Thanks for joining in.
Good
Seth,
morning.
before I talk to you about all the global lack of cues this morning, a quick take on what are you making of that commentary coming in from the ministry in India. We had the PM indicate that there could be long-term capital gains on capital markets, and of course, 24 hours later, the finance minister has come in and said that that has been misinterpreted. How are you reading into all these mixed signals? Are you feeling like your FI especially are being caught off guard and on the wrong foot more often?
Well, I think the fact that the finance minister came out, basically very quickly and sounds very emphatic that there's no policy change, and that wasn't the intended communication from the prime minister, suits me fine. I believe him. I think that's right. On the other hand, maybe the prime minister, not unlike Donald Trump, was sort of floating ideas and seeing what the reaction might be.
Seth, we'll have to wait and see what the reaction will be. But how are you viewing Indian markets right now? Have you have any sort of ambitious expectations from our budget? Is that going to be an important event that could determine FI flows or the view of investors like yourself? I think we've lost Seth, but Pranoy, this is extremely confusing. I mean, this is so immature if you've got to think about it, right? We've heard commentary coming from the PM talking about long-term capital gains. Finance minister comes in 24 hours later, indicating that that has been misinterpreted. I'm not sure how that plays out because this is actual commentary we're listening to. So I think markets are going to be once again caught on the back foot. It's only been 2 months or rather 2 months to go before the budget, and this is not what you want to hear because a lot of hope is piled up on the budget.
Well, absolutely. I mean, this is absolutely something that FIIs, HNIs, and even participants in the stock markets do want to hear, because this comes at a time like this, right? Because you're looking at divergent yields as far as US and Indian markets go. I've just made a small note. The US 10-year is now at, all right, I suppose we've got Seth Freeman back on the line with us. Seth, we were asking you about the timing at which this divergent view from the ministry is coming in as far as India goes. Does this spook FIIs as well as HNIs in terms of capital allocation? Because it comes at a time when the US yield is rising, and possibly there's chance after this US Fed rate hike that has been initiated of some flight back to the mother currency. So does this exacerbate matters in terms of fear for Indian markets? Seth, is my audio reaching you?
Yes. Hi.
Yes, so my question to you was that this divergent commentary from New Delhi, from the center, is in terms of long-term capital gains tax or possibly the implementation of it is coming at a time when we've already suffered a protracted grind down to lower levels. This also comes at a time when the US yields are rising and the rate hike by the Fed has been undertaken. So do you see some exacerbated chances of capital flight to the mother currency?
Yes, I think this would be very negative for the market, but it has less to do, in my opinion, with our interest rates or any other thing. We pay long-term capital gains tax on securities here in the United States. So whether or not there's gains paid in India, we have to pay the gains in the U.S. And then after these changes in the Mauritius and the changes coming in the Singapore tax treaties, without having a specific carve-out for capital gains tax paid in India and to get a credit for the tax paid and the U.S. taxpayer, we would end up paying capital gains tax twice. We'd pay it in India, and we would be liable for paying it again here in the United States. So this makes it much more expensive to invest in India, and it might definitely affect investor allocations to India.
So just in a few words, how are you viewing India right now? Are you buying into our markets, or is it an avoid very evidently?
Well, we have a uniquely very long-term, consistent approach to it. And so, our view is much more holistic. And we've seen, in spite of currency devaluations over the last 10 years, the market is up well over 3 times. And I don't expect that kind of general trend over a long term to really change. The problem is that fund managers are graded daily, monthly, quarterly, annually, and their investors typically behave the opposite, where most investors will, unfortunately, buy high and sell low. So, I think for foreign investors, you really have to have confidence unless you're a very active trader and looking at specific companies.
Right. Seth, so essentially you said that you already, clients will have to pay a tax as far as the United States goes in that geography and in that tax law. But as far as Indian taxes are also concerned, if something like this is implemented, it will be a double whammy of sorts. So I'm assuming that the risk-adjusted rate of return for portfolio managers and the net present value of the book as they go by will further shrink, and it's not a good time for that to happen, because we've seen a huge bond sell-off as well as an equity sell-off ever since the month of November, and this comes at a time where the money supply, or the M3 as it is called, has shrunk, at least in the near term, till the time it doesn't revive.
I think that in general, allocations to emerging markets for a lot of big institutional investors that are not specifically index-based is going to be muted and have sort of a wait-and-see approach on 2 fronts, both from a U.S. foreign investor standpoint, to try to decipher what the Trump policies and the implementation of those policies might look like. And we won't really know much until probably February. And then we're beginning to look already at earnings reports for fourth quarter, both domestically in India and globally. So I do think there's going to be relative caution. And I would actually expect continued outflows from India over the next 3 months, unfortunately.
So that's about, of course, domestic triggers. But internationally, are there any headwinds that we need to watch out for?
Well, I think we have to look and see how Europe looks, and whether we're going to continue to see really slow growth, and what kind of fiscal policies we have, and what happens to the oil price. We've seen some increases. Who knows if the OPEC treaties and the non-OPEC countries are going to really follow the reduced production levels, which in theory should raise prices, and that could have a negative impact. And then again, we're just looking at earnings season, and so I just think it's just going to be kind of a wait-and-see approach to see what earnings look like.